Hello students, my name is Masbulele Mngolo. Let me welcome you on One Coach Academic Partners. So today is our final session on question 1. We have done with the income statement. Today we will be completing an extract from statement of financial position, which is your balance sheet. We are done with question 1 today. Then we are going to move to question 2. This is our 6th session. If you haven't watched our previous videos, just go and watch our previous videos, because there's some information that will be referring you back to the video that we've already posted. If you are watching us from YouTube, please follow us on if you are watching us on TikTok, just follow us on YouTube for more videos. You'll find that on TikTok our videos are limited to 10 minutes, but on YouTube you will find the full video. Today is gonna be a quite long session. It needs some mathematical knowledge and also you're going to need to have some sort of a tricky question, but if you know how to use the information that you are given, then we will get there. So without wasting time, let us go to our today's questions. I've already said that this is our last session, and then we are completing the statement, the extract from the statement of financial position. The reason why I say it's an extract is because it's not a full statement of financial position. Once the question says you must do a portion of financial position or your balance sheet, that means it's an extract. It's not a full financial position. So let's move. As you can see, I've extracted some information there from additional information and also from trial balance, as well as your answer sheet. So this is the information from additional information. And then this is the information from trial balance. And then this is an information from your answer sheet. You'll find on the answer sheet that you've already given ordinary share capital. That is what is nice about accounting, especially in exam. It's more easier than the test that you are writing, because you'll find in exam on your question, on your answer sheet, you'll find some of the information is already given. The answer sheet is already giving you some guide. So today we have a thin space that we are going to use here for our calculations. So I'm going to write, and then after we're done with those calculations, I'm going to erase all that information, all that whatever. So I hope as we are continuing, you will be taking some notes. So without wasting time, let us start. So we are here on ordinary share. What we want ordinary share equity here. We want to calculate this ordinary share equity, and we've already given ordinary share capital. So now we are left with the retained earnings, and we don't know, when we are looking at the trial balance, the retained earnings there is a question mark. What does that mean? That means there is an information that is given that can lead you to calculate the retained earnings, or the retained earnings could be a missing value. So there is this information that you are given, you can use, and then to calculate the missing value, which is your retained earnings. So here, when we are looking at our additional information, there is this information here, the net asset value per share. It says net asset value after taking into account all adjustments, the net asset value, the NIV, is just abbreviation, was correctly calculated as 675 cents per share. What does that mean? The net asset value is one of your ratios. NAV is one of your ratios where you take your total equity you divide by a number of shares. Or total assets less total liabilities, which means it's also equal to total equity. So this one needs an understanding of the accounting basics. What are the accounting basics I am talking about? The accounting basics, you need to know this. Asset is equal to owner's equity plus liabilities. This is the basic accounting. You need to know with this one. So liabilities is equal to asset less owner's equity, as well as owner's equity is equal to asset less liabilities. That's the accounting basics you need to know, and it's going to assist you here to calculate this information. So let us calculate using the information that we are given. And then we are given there that on 28 February there were 1,150,000 shares in issue, which means the company has 1,150,000 shares. So first, this means this 675, there was an amount that was divided by the number of shares, and then it gave us 675 cents. So how are we going to get that amount? In order for us to get that amount, we are going to take this 6, it's not the rands, cents, sorry. We are going to take this 675 and then we multiply it by these shares, 1,150,000. And then we get 675 multiplied by 1,150,000. And then we get 776 million. 776,250,000. But we know that we didn't convert our cents into rands, so there are 100 cents into 1 rand. So we want to convert these cents into rands now. So we are going to divide this by 100. Divide by 100. It's 7,762,500. So meaning here on ordinary shares we have 700 and 7,762,500. There are many ways you can do it. You can start by converting this one first. Convert this 6. Sorry. The easiest way that cannot confuse you. Convert this cents into rands first. So 675 divided by 100. 100 cents in 1 rand. And then 675 divided by 100. It's almost 6 rand 80. Some of the question will give you into rands. 6 rand 80. So multiplied by the number of shares. Number of shares is 1,150,000 shares. Multiplied by 1,150,000. It gives you straight the amount 7,760,000. So now we've got the ordinary share capital. So then we can calculate the retained earnings, because we know this amount, the ordinary share, is equal to ordinary share capital plus retained earnings. So we are going to take this ordinary share and then we deduct this ordinary share capital that we already given. Take the total shareholders' equity and then we deduct this ordinary share capital we've already given. Then we are going to get our retained earnings. Deduct 6670 into 3. So meaning it's 1,092,500. Then we are done with equity. Now I don't want us to waste time. We want to finish this question as early as we can. Don't want our sessions to take long, because one of the things I've learned from YouTube is that you students don't want long information. You're getting tired easy. So let's move to mortgage loan. Mortgage loan, it said all transactions with respect of a loan were recorded. A monthly fixed installment including interest was paid in full. A total capital, the capital portion of the repayment will increase by 10% over the next financial year. And then when we go to our trial balance, there is a loan. In 2022, it's 1,159,000, and then in 2021, it's 1,280,750. It should be like that, because when you are paying your loan, it goes down. It should go down. So now we want to take out the current portion. What is the current portion? The amount that will be paid in the next financial year is no longer a long term. That one, it's not going to be a long term, because it's going to be paid within 12 months. Under long-term liabilities, we only include the things that are more than 12 months. So that current portion that is going to be settled within 12 months, we need to take it out and put it on current assets. Sorry, current liabilities. So now we are also told that the installment will increase by 10% next month, as our information is given there. So how are we going to calculate how much is our installment? So the difference between the two will tell us the monthly installment. When you will be doing accounting and going, you will be told about the thing that we called where you will be dealing with loans, and then you will be given some information, and then you are told to calculate. Just forget the name and the name of that chapter. But before you calculate interest, you take the current loan, you take the current amount, you deduct the current portion you have with the balance, and then you multiply with the interest that you are given. Is capitalization. Yeah, I think it's under capitalization. Yeah, it's capitalization of interest. Capitalization of interest. Yeah, I think so. But here now, so we are going to take this, the previous one, the 2021, and deduct the 2022 and know what was the current portion for this year. So let's go. We have 1,110,59. Sorry. Let's start with the previous one. We have 1,280,750, and then we deduct 1,159,000. So 1,287,50 less 1,159,000, and then we know that this year they deducted 121,750. But for the next current year, it will increase by 10%. So, which is we are going to have 121,750 multiplied by 110, because it's going to increase by 10% divided by 100, or 1.1. The other way you can do it, you can calculate 10% of this first. After calculating 10% of this amount, and then you add it back to this amount. But the shortest way, you say 110, because this amount is already 100. You add that 10% divided by 100. Or you can say 1.1, the other way. So multiplied by 1.1. So in this current year, we are going to deduct 133,925. So the current portion for this year is 133,925. So we need to know how much is our mortgage bond. So we are going to deduct this 133,925 from this 159, and know what is our long-term liability. So let us go. So we say it's 1,159,000 less 133,925. So is equal minus 1,159. So it's going to be 1,025,075. That will be our long-term loan. Our long-term loan is 1,025,925. Sorry, and 75, not 925, and 75. 0.75. So we are done with our long-term loan. So now we are moving to current liabilities. So our current liabilities, trade and other payables. So creditors control, trade and other payables, we have 428,000. So trade payables 428,000. But there is that amount we have calculated in our session 2. Hence I was saying we need to go back and watch our previous videos. There was an income that was received in advance of rental, so that amount needs to be included under current liabilities. As well, if we were told to do the asset portion, there was an amount for the security that we have paid. That amount should be an expense paid in advance, should go to current assets. But now we are only doing the equity and liabilities, so we are going to take only the income received in advance. So let me check how much was that amount. It was 24,300. The amount we deducted from rent, 24,300. We have showed you how to calculate that 24,300 on our previous session, which is our part 2. 428,000 plus 24,300, meaning is 452,300. 452,300. And then we go to shoulders for dividend, and then there is an information from trial balance. Dividend on ordinary share is 207 for 2022. On additional information, we are told that the total dividend for the year amounted to 345. So the dividend that should have been paid is this 345, but we only paid 207. So the remainder is the amount owed to shares. So let's calculate the remainder. I hope you are hearing me here. We were supposed to pay the 345,000 for the dividend, but on our books we have paid 207,000. So the remaining balance is the amount owed. So 345,000 less 207,000 is equal 345,000 less 207. It's 138,000. 138,000. So 138,000. And then we are moving to SARS. We are moving to SARS. You need to go back to our previous session, which is part 5 again. We've calculated that our tax is 152,700. You need to go back and watch our part 5. We've calculated that our tax is 152,700. But when you go to trial balance, you have seen that we have made a provisional tax payment of 130. What is the provisional tax payment? What we are doing as accountants, when they are preparing books for the company, during the year they predict the amount of tax that will be owed or paid to SARS. So that amount is paid is captured aside. So if that amount is more or less, it depends, because it is what we estimate. And then when we calculate, when we doing our business during the year, and then when we are preparing our books, we will find that the amount that we owe SARS is different from the amount that we have kept aside from SARS. I hope you are hearing me here. So we have budgeted 130,000, but actually it was 152,700. So the remainder is the amount that is owed to SARS, 130,000. So 152,700 minus 130. We owe SARS 22,700. 22,700. So 22,700. So now we can add all our information. So we'll start by adding all our current liabilities. 22,700 plus 138,000 plus 133,925 plus 452,300. So our total current liabilities is 746,925. So our non-current liabilities is this amount of 102,575. So we add that amount. We want to calculate the total. The total now, this total, that's what we are calculating. We add this one and this one, add all the three, plus 102,575 plus 7762,500. And then our total liabilities and equity, our total equity and liabilities is 9,534,500. We are done for our today's question. So if you have any questions that you would like to ask, I have provided you with my email address. Please like and share our videos on YouTube. Thank you. Bye.